Welcome to KNN. KNN is brought to you by Bob Knakal, Chairman of New York Investment Sales at JLL.
Hi, I'm Jon Hageman, Managing Director at JLL. Welcome to KNN. Today I'm here with Bob Knakal, Chairman of New York Investment Sales. And today we're going to talk about the third quarter investment sales numbers and how the different product types perform. So Bob, we talked about the total dollar volume and the total number of properties sold through the first 3 quarters of 2021. Maybe just give us a quick recap of those numbers before we dive into what happened in the different product types.
Yeah, again, Hags, a lot of volatility, a lot of ups and downs, head fakes in the market. The dollar volume is on pace through the first 3 quarters of this year. And again, we're talking about the Manhattan sales market for transactions over $10 million. Through the first 3 quarters, the market's on pace for about $9.6 billion of total sales volume. That will be down about 14% from where we were last year, and down about 83% from where we were in 2015 with $57.5 billion. So, the dollar volume numbers were very disappointing, and that kind of was counterintuitive relative to the good feeling that we have in the market, the activity we see in the market. But if we look at the number of properties sold, the market's on pace to be up about 31% from where we were last year, which is very positive. We did have about a 25% drop from the second quarter of 21 to the third quarter of 21. So that is a little bit of a head scratcher, but we do expect that numbers both in the dollar volume and number of properties sold will increase in the fourth quarter, and that 2021 should finish ahead of where we were in 2020.
That's great, Bob. So let's now dig into the different product types. Tell us how they've performed so far through the first part of the year.
Yeah, Hags, you're right. The different product types have performed very differently. If we look at dollar volume, there are 2 sectors that have actually improved, that had an increase in the volume of sales. So hotels was one sector, walk-up apartment buildings was another. All the other sectors actually had lower dollar volume in the third quarter. If we look at a number of properties sold, we see that every sector has shown an increase with the exception of land, which is so interesting because so much of our activity these days is in the land and development market. So, generally that's how they're performing. And, we should talk about each individual sector because they're all really interesting to take a look at.
Sure. How multifamily has been one of the bright spots. That's certainly some of the things we've been seeing recently. Let's talk about those numbers.
Yeah, multifamily sector is doing great. I mean, we want to get as much multifamily as we can today. There are new buyers coming into the market, notwithstanding the fact a lot of longtime New York families and multifamily investors are buying around the country today. There are new folks coming in, a whole new crop of buyers from around the country, around the world, from New York itself, folks who hadn't bought multifamily before in the market. So the dynamics and the feeling in that sector are really good. But if we look at the numbers for multifamily, we see that dollar volume is on pace for about $2.8 billion this year, which would be up about 20% over the $2.4 billion that we had last year. In total, the number of apartment buildings that sold so far this year are on pace for about 48 for the year, which would be up 66% above the 29 properties that sold last year. So clearly it's been a good year so far for the multifamily sector, and we expect that to continue to improve as we finish the year out.
So while multifamily's been a bright spot, let's talk about office, which I know the numbers have been pretty low.
Yeah, office has been challenging. Basically people still trying to figure out what the work from home experiment is going to have on office fundamentals moving forward. So if you have an office building with very long-term leases, clearly there's a lot more demand for those types of properties, but anything where you have to project rents in the relative near term, that's very, very challenging. So we've seen a reduction in the number of office buildings that have sold. We're on pace this year through the first 3 quarters for about $3.3 billion in sales volume, which would be down about half from where we were last year. So that the dynamics in the office market are a bit challenging, but are improving. We see a lot of large transactions that have been announced, the big properties coming on the market. Seems to be more activity there, and so we're hoping that those numbers pick up as we go through the year. But to get more into the numbers, we are on pace to be about 48% below the $6.4 billion of of office activity that we had in 2020. And just for some relative perspective, if we go back to 2015, we see that there were about 23 billion in sales volume in the office sector. So the market's currently on pace to be down about 86% from the peak of the market in terms of dollar volume. With respect to the number of properties sold, the market's on pace for about 33 for the year, which is actually up 15% from the 29 sales that occurred in 2020. And again, the number of properties sold in the office sector is significantly below where it was at the peak of the market.
So we know office is challenging. We often talk about in conjunction with that the challenges or the difficulties we've seen in retail space. Let's talk about those numbers maybe for a minute.
Yeah, and in the retail market, clearly there are some challenges. We're hoping that the retail market has kind of settled and has hit its bottom and is poised to recover. But the sales volume numbers in the retail sector have not been great. In the third quarter of 2021, there were only $40 million of investment sales in the retail sector, which is the lowest number we've seen in quite a while. And the market's on pace for about $560 million of volume for the year. That's down by a little over a third from the $880 million we had in the sector in 2020. And for some relative perspective, if we go back to the peak of the market in 2015, there was about 5.1 billion in sales volume. So we're on pace to be down about 89% with regard to the dollar volume of retail transactions. However, if we look at the number of retail properties sold, we see that we're on pace for about 19 for the year. That actually will be up a little bit from last year. So again, we're seeing a little bit of a positive trend with number of properties sold as opposed to dollar volume. But for the retail market really to thrive, we need to have price discovery relative to rent levels, see where rents are going to be. So many of the properties we're looking at today, the existing rents are well above market, and we need to establish what market rates are in order to be able to fully project retail and get investors to have confidence in the retail sector again.
So last but not least, let's talk about land. What do the numbers look like so far?
Well, Hags, in the land market, we're seeing a very big divergence between the activity that we're seeing, contract signings we're seeing, and what has actually closed. It was only $89 million of land sales in the third quarter of 2021. There were only 2 land sales closed. So the numbers are way down. If you look at where we are in the land market for the year, we see that through the first 3 quarters of this year, the market is on pace to have about 515 million of land sales for the year. That would be down about 34% from the 775 million that we had last year. And more importantly, it would be down about 94% from the $8.3 billion of development site sales we saw at the peak of the market in 2015. With regard to the number of land sales, again, there were only 2 land transactions over $10 million in Manhattan last quarter, which puts the market on pace for about 9 for all of 2021. That number would be down about 56% from the 21 sales that occurred in 2020. And again, that's the only market sector in which the number of transactions is on pace to be down from 2020. And relative to where we were at the peak of the market is on pace to be down about 93%. So clearly, the numbers don't look great for land, but there have been, the market's on pace for 9 sales this year. We have 12 land deals under contract right now. So clearly those numbers are going to improve, and we love to see that optimism within the land sales market because it's indicative of what developers feel market conditions are going to be like 3 or 4 years from today when what they're building is going to come to the market. So, generally, we've seen this volatility in the way different sectors are performing, but we believe that that the numbers are going to continue to improve and that we're finally pulling out of this.